Okay, actually, after discussing a lot of positive things about the African continent, and the huge opportunities that are there to be highlighted for collaboration, for synergies among the African countries, African nations, and young entrepreneurs, we are now tackling things when it comes to global trade from different perspectives, which is about risks, about challenges, about directions, and how can we get the data to inform also decision-making process, and what measures can be taken. We are actually now in a part of a volatile world where we are now witnessing certain things like countries are imposing taxations, trade barriers are coming back, a lot of legislations when it comes to global trade are being affected. So these are also giving strong messages. Which directions are we going to? What are the risks associated to these kind of decisions when it comes to global trade? If you are really interested to know more about that, I highly encourage you to follow our next panel. And I take this chance to welcome Mrs. Razan, the CNN business from CNN Business Arabia, and she will be welcoming our distinguished panelists. Over to you, Razan. Come to the stage.
Good afternoon, everybody. Welcome to this session. Please, may I ask the panelists to come? Welcome. Rafael Magenga, CEO of Tanzania Private Sector Foundation. Miko Lavanti, Senior VP at Mobile Networks at Nokia. Bob Sorensen, MD at Sorensen Management Group. And last but not least, Stefan Asimiwi, CEO of Private Sector Foundation in Uganda. Welcome to this session. Given, there's somebody missing. I'm guessing they're either not here or they're not coming. Yes. Okay. Oh, perfect. Given the decline in global trade merchandise, how are your business strategies been impacted, and what are you doing to navigate the current landscape? You want to start? Please go ahead.
Thank you. Good afternoon, everyone, and thank you for the organizers for having us here today. So myself, I'm not a business owner. I'm not running a business. I'm a banker and a development financier. So basically, what we do is to support businesses that want to strive on the African continent and that are looking for financing in various forms, be it equity or debt. And on that basis, actually, we provide the support that they need. Now, what we can say about the declining growth patterns that we are seeing right now is that for us, it is very important, actually, for companies to be resilient and have the capacity to adapt and pivot very quickly when they face shocks or when they face disruptions. And what is happening right now is that because of these trade restrictive measures, actually, this could have a direct impact on their bottom line because it introduces new costs. It could affect their competitiveness, and ultimately, actually, it will affect also the consumers. So it's really how capable they are actually to withstand those shocks and how capable they are to absorb part of the cost or come up with strategies actually that will allow them to pass it to the consumers. And you have different ways of doing that, and we are part of the solution. We are part of the solution. And being a DFI, what we provide is long-term financing at concessional rate. So if you are able to tap on those resources, of course, you can be able to still continue producing at the same level and also selling your products without having to affect actually the ultimate beneficiary, which is the consumer. So in that sense, that's the type of solutions that we bring. But also beyond that, in the markets actually where they are trying to strive and evolve, we, because we have a development mandate, can have a discussion with countries, governments, in terms of policy reforms that are needed actually to be able actually to not be too affected actually by those trade patterns. So really, that's the type of solutions. We are solution oriented and solution providers, and are here to support businesses in those difficult times. I'll stop there.
Bob, how do you think is the correct way to navigate through the current landscape?
The correct way to navigate through the current landscape?
Yes.
I think it's fully dependent on in which geographical area you're working. So, for instance, for here in the Middle East, there's hardly been any slowdown in the global trade. So actually it's been expanding. So during COVID, there's been a bit of a dip, but after that it rapidly increased. And actually last year there's been no decline, but actually an increase of like between 4.5 and 5%. So that means that this region has done reasonably well. Now some other regions, they have not done as well because they couldn't catch up as quickly. So I think the geographical aspect is really important in the first place. The second place is to which markets are you exporting and from which markets are you importing? So for instance, with the very latest developments with the US where they're imposing some restrictions or higher tariffs, that could now majorly impact the whole value chain and your supply chain. So ways to navigate that as a business. So for instance, if you're based in the UAE and there would be an impact on those tariffs, is can you outsource to different parties parts of your supply chain? So not being dependent upon one source. We have seen that transport prices across the continents have increased in the past decades, higher energy prices and so on. So if that's a potential risk, you can also look at near sourcing or domestic supplies instead of getting it from further other countries. Another aspect is, for instance, your risk management. So from a risk management perspective, what are the risks that you can anticipate and how you can then, as an organization, put in the right structures in order to make sure that if there's any disruption or any hiccup in that supply chain, that you can deal with it in an appropriate way and make sure that you have business continuity. So I would say that these are the main important factors in order to navigate the current landscape as we have.
And moving forward, what is the correct way to minimize risks? Please, no, the question, sorry, is just, please go ahead. There's something wrong with the mic.
Thank you very much. I think I'll talk about first I come from Uganda, and Uganda is part of a regional grouping called the East African Community, where we all sit. Currently, we have a population of, under the East African Community, of close to 400 million people, our size of market. And Africa has a population of about 1.3 billion people. But when you look at the intra-African trade, it's less than 15%. We trade mostly with Asia and a big part of Europe. When the economic shocks hit, we are hardest hit on account of the fact that we do not have very strong regional or intra-African trade regime, if you like. My view is that, and COVID was a very good experience for us to see that, because when COVID hit, Africa in many ways than one suffered, especially from global supply chain movements, so to speak. So in Africa now we have started something called the Africa Continental Free Trade Area. And part of that is to strengthen first regional integration, coupled with the bigger intra-regional discussions that will basically ease the movement of goods, services, and obviously add value to our context of business. One of the biggest and most efficient ways for that is to up our game on infrastructure, resource value addition, and engage our innate professional and academic elements that then will be harnessed towards that. In the context of the East African community, in the last 25 years, we've seen a growth of business, of integration, and that in many ways that one has reduced the risks of doing business with each other. So first, stronger economic regional integration is one of the major ways that can reduce, because we all have our unique capacities and capabilities that then would give us that resilience that would overcome that. But secondly, we've also seen that there is also a sense in which we do not have stronger negotiations as regional groupings and countries. And I think that the latest events in America have shown the need for countries really to come together and engage as blocks rather than individual countries. Yeah. And therefore, I think that could be the beginning of a conversation. They need to have our integrated, stronger negotiation in the context of then mitigating some of these regional trade risks that will emerge out of anything that would come out of the woodworks. Thank you.
Osman, coming back to you. Despite the uncertainty, what are the opportunities that you foresee for businesses emerging this year or in the next 5 years, despite everything that's going on?
Okay, so before you can engage in opportunities, you need to know exactly where you stand, actually, what happened in the previous year, and from there you can develop strategies actually that will allow you to thrive and capture those opportunities. For the year 2024, global trade flows were roughly $33 trillion. That was a marginal increase from 2022, but mainly due to services in trade and some high growth sort of sectors in ICT, technology, innovation, and apparel, which is very important for Africa. You have certain sectors actually that have done well. I think we all know them: critical minerals, EVs, technology, as we said, fintech, energy. Those have done well. And you have some actually that have really struggled. Automotive is one of those. You also have the sectors of manufacturing, actually. So really, that's from that diagnosis, you can easily see, if you were to take opportunities and if you were a company, actually, what sort of businesses and strategies you would need to put in place actually to capture those opportunities. From the African standpoint, what we have seen is that the opportunity of the continental free trade area actually is opening up a number of opportunities that are critical for the continent. The very first of them actually was mentioned. It's about infrastructure, because developing economies, and especially in Africa, are driving demands, for construction materials, for everything related to infrastructure. But you have other factors in the pharma industry, in agri-tech, and what we call tech and tech-enabling sectors or industries: agri-tech, health tech, edu-tech. All of those sectors actually present tremendous opportunities for businesses and companies on the African sector. The critical minerals also is one of them. As you know, Africa actually is home to a number of those minerals that are key to certain sectors. If you see the global commitment actually that has been taken to embark into green supply chains, to embark, into economically friendly sort of sectors, that gives you the direction of travel when it comes to harnessing actually those resources. It's the same for rare elements as well, which are needed. So all of those opportunities are here, despite the headwinds, that we are seeing right now with the trade escalations and the trade war, that offers opportunities at the global scale for growth. So for us, really, what we do is continue giving the support that are needed for our countries, our regional member countries, to come up with the reforms, with the strategies that are needed to be able to attract investments, but also to support, trade flows and trade volumes on the continent. Just as an example, for the past 10 years, the African Development Bank has supported more than $12 billion in terms of investment in trade infrastructure, trade and trade-related or trade facilitation infrastructure. Same for ICT. For the past 3 years, we have invested more than $2 billion, most of which going to the low income countries. The same when you talk about trade and trade finance. We have supported more than 3,000 actually transactions through 200 financial institutions. And really, those are the things that we are doing to continue supporting companies, supporting enterprises that wants to continue growing in those sectors that I have just mentioned. And one last point also that I want to highlight is the importance actually of venture capital and startups, because the financing that is flowing in that sector is so scarce, but yet so catalytic, because those are the ones that will support the future unicorns actually in the next decades that we will see. So we also have a strong belief that venture capital will continue to flow. Venture capital actually will continue to be critical, and venture capital will continue to be critical because you have the most youthful population globally that is located in Africa, and that wants actually to act as entrepreneurs and that want to strive as innovators. So I'll stop there.
Thank you. Bob, Osman mentioned a lot of opportunities. How do you think businesses can position themselves to make use of these opportunities? How do you think businesses can position themselves to make use of the opportunities Osman mentioned?
Yes. All right. Perfect. Well, I think first you have to make a good distinguishment in a business. Who's running the business? Who's the leadership in the business? If you have a smart leadership in your business, they have a strategic view. And a proper strategic view means you understand the market in which you're operating. You understand your position in the whole value chain. You understand which market segments you're addressing. So it all starts with proper leadership. Know where your company comes from, where you're currently at, and where you want to go to. So what are the resources that you need in order to grow? And either access to capital or to the capital markets, access to the right resources, access to the right talents for the direction you want to go to, and what is also the dynamics within the market. So are there going to be a lot of new entrants into your market, so in order that competition will increase? What are some of the other elements, such as do you have the current IP on your products and services that you're offering? So how strong are you? So making benefit of opportunities means very strongly assessing your own company, knowing how it functions. Of course, one of the risk elements we discussed, but also moving forward. The two biggest growth geographic areas for now will be India and Africa. And given the potential of Africa with a huge youth population, as we discussed in the previous sessions as well, I think that's where the opportunity lies of getting the right people educated within like the STEM, science and technology kind of venues. So having the ecosystem set up in such a way that the countries or local geographies can fully benefit from the talent that will become available in the near term and medium term. So that's an partnership basically with your academia and with the higher schools of technology and so on to make sure you get the right resources into your country and that you don't need to import them from other places. For instance, the UAE, it's especially Dubai, where you have 90% expat, 10% locals. So that makes you as an economy very vulnerable, as a business very vulnerable. So I think Africa has got a huge potential there. So seizing opportunities is making, as an organization, yourself attractive in combination with government. So proper legislation, a proper legal system. So what are the rules and regulations if anywhere in the trade things go wrong? So you have a proper system that can defend investors and businesses alike. And the next part I would say is set up the proper partnerships with other parties that already advanced within your own field that either might have an interest in gaining a percentage in your own organization or partner with you to further accelerate growth within your domain.
Stefan, how do you think businesses are managing their risks posed to geopolitical tensions?
Say that again.
How do you believe
Could you just repeat that, please?
Yeah, sure. How are businesses, in your opinion, managing their risks posed to geopolitical tensions? The rise of geopolitical tensions, actually.
That's an interesting question. It's yes and no. So first of all, I think post 2019 and post that time, we've seen two
COVID.
probably very extensive impacts on global business. The first was, of course, the COVID-19, which was unexpected. I mean, since SARS and bird flu, we'd never seen anything of that nature. The second one, and I'll come to the impacts of that. The second one was the war between Russia and Ukraine, and consequently, the war in the Middle East. Those three events, which were unprecedented, they were unplanned, they were, just suddenly, hit us completely, turned upside down the global business environment and left us in many ways than one in a very distracted and destructive position. So they did two things. One, there was that devastation that came with it. But secondly, it suddenly awoke us to the need for us to have a state of preparedness. Diversification, risk management, thinking through traditional thought processes, but also in many ways than one prepared us for resilience. Now, where I come from, we had to come up with some very urgent austerity measures, both as a country and as a regional grouping, to the extent that now we have come to terms with new ways of doing business. Now, those new ways of business are informed by the fact that there are imminent risks that will emerge and can emerge, and therefore the need for us to think through some of the processes, systems, policies, and enabling environments. And therefore, what we've done is, in a sense, start to think through mechanisms and ways in which we can create a sense of resilience to what sort of processes and procedures can we scale down in an unlikely event that such a thing would occur. But three, also look at how do we harness potential opportunities that can come together with us. And so therefore you have think it was earlier said in the previous meeting, one of the things that was able to be sustained was the need to create business development services within a business environment that would then help businesses stay strong and emerge out of that crisis. But secondly, there's need for diversification in the context that if one area suffered, then you get new or alternative means of doing business. But three, look internally within yourselves what sort of capacities, resources, and what sort of alternative methods can be used to help. Now, in the case of I'll give an example in my country, Uganda. When COVID hit, many businesses actually got out of business. But suddenly new businesses emerged. A case in point was distilleries, which were used to making spirits. And then suddenly we had the emergence of new products like sanitizers, which basically came out of a need to give an alternative or an opportunity, so to speak, on meeting some of these emerging challenges, but opportunities at the same time. So my advice would be the need for creating a resilience capacities and capabilities. 2, diversification. 3, a need of harnessing together opportunities that can then create better business engagements. But fundamentally, the need for economies to prepare policies and procedures that are enablers towards that sustainability that can then help businesses to come out of that. And at the end of the day, it takes all of us to work together to prepare that sense of environment that will enable us to move through.
Stefan, following up on what you said, actually, do you foresee any trade policies or regulations that can actually help or hinder global trade?
Absolutely. I think it's necessary that you see everything happens, breaks or makes if you have an enabling environment. That enabling environment is informed by policies and procedures that guide that sense of governance. So therefore, it's necessary that countries or regional groupings or even continental groupings to come together to bring in place policies and procedures that enable that environment to thrive. So, I mean, we've seen WTO, we've seen UNCTAD. Now in Africa, we have the ACFTA, which is pushing countries and economies towards an integrated sense of direction. From where we come from, we believe in stronger economic groupings that can then have a stronger sense of bargaining power and negotiations in some of those disablers, if you like, that then create that enabling environment for businesses to thrive.
Osman, looking ahead to 2025, what key trends do you believe will shape the future of global trade? Sorry.
Yes. Look, so far actually the impact and results of the multilateral trading system has been very good as far as developing economies actually are concerned. We have a narrowing gap of income disparities. You would see that income per capita in low-income companies, in low-income countries, actually had nearly tripled, really. And all of that really is due to the role, actually, of the system that we had in place, which was working, and which were fostering, actually, a level playing field, and ensuring that we have inclusive trading systems where no one is left aside. Now, what we are witnessing is
inclusion.
Inclusion. What we are seeing is that there are some new actions, that are strengthening balance actually that we've been able to have for the past 30 years actually, since the signature of the Marrakesh Agreement actually. So going ahead, what will happen is that we'll see more and more regional blocs actually affirming themselves. We'll see more and more countries in the same region trading between themselves, and we'll see we'll see more and more bilateral trade agreements and less actually multilateral. Will that be good or bad? Common sense is saying that it might be bad because it will break all the benefits that we have, in global value chains, in access to market, in competitiveness, in access to capital. But we'll see really where it will lead. And what is also important actually to mention is that those regional blocs have to work, even harder, because they will compete between themselves in terms of having the right regulatory environment, having the right framework, and having the right fiscal regimes, the right incentives actually to attract investment and to attract trade flows. So in that sense, maybe it would be good for regional blocs to start, engaging discussion to see how we can simplify, how we can harmonize actually those regulations that they have, so that that multilateralism can continue, at least at the regional level. For Africa, for us really, we are the starting points. We have the AFCFTA. I think we heard it from the last panel. 49 state parties have signed it, 49 signatories. We just heard it, 1.4 billion people, 3.4 trillion GDP, 3.4, with the potential actually to reach 5 trillion in 10 years. Wow. So really what is important for us is to make sure that we have the right inputs, we have the right infrastructure, we have the right investments that will hopefully help us, increase significantly the very low intra-African trade flows that we have. We heard it, 15%. If you look at Asia, it's 62%. If you look at Europe, it's 66%. So really there is a potential for us really to grow that. And by the way, by 2050, the African population will be close to $2.5 billion. And that will add an additional $16 trillion of potential consumer spending. So really, we have all the ingredients, within our continent to emerge and maybe be able to have that resilience that whatever happened at multilateral level, at least at regional level, Africa can strive.
For 2025, Bob, what we are witnessing, unfortunately, is further geopolitical fragmentation. How do you think companies can be ready to face the challenges that will be, how will they be impacted, and how can they overcome these challenges, these new ones?
Right. It kind of depends what your business model is. So if you are, say, in African continent and you can do a lot of trade within the countries around you, you're much less impacted by, for instance, what's happening in the US.
So within the continent?
Yes, within the continent. Yeah. So if you have a very large international conglomerate, yes, you will definitely be impacted and you will have to take your measures accordingly. Now, I think there's a few factors at play that if you look at the Trump administration, that guy's a deal maker, and sometimes he throws curveballs. So people, either you react upon it or you just lean back and say, okay, let's wait, let's really see what's going to happen. And I think he's just rattling up a lot of things. One of the core reasons why he's actually imposing tariffs is defending the domestic market, which they neglected for a long period of time. So it's a temporary measure to fulfill his presidential electorate promise. However, they will not be able to sustain this. So I'm quite sure that things will get better over time. And as a business, you also need to look at the medium to long term. So in the short term, yes, there's not a lot of turmoil, but let's see what's going to develop. So you look at what is your surrounding, to what extent are you being really, really impacted? And if there's an impact, how can you mitigate? How can you regulate to any extent? What is your own local government going to do? Are they going to provide some compensation? Are they going to retaliate? What will they do in order to protect their own domestic organizations and supply chains? So I think that's a really important factor. I think the opportunity is always there, and maybe because of this impact, you start to look at other markets and other people and other potential partnerships which you never even looked at because of this new situation. This can provide huge opportunities. Maybe there's a link towards China. I mean, China has already got a massive interest in expanding into different markets. They have been already in Africa and also in the Middle East for like a large number of years. So there's a huge potential maybe to actually warm up that relationship and just fend off the parties that are less willing at this moment to cooperate.
Thank you. Stefan, any additional thoughts before we wrap up?
I think for me, over and above what my colleagues have said, is the need for us to have a new, again, I'll talk about Africa because I'm more familiar with that, a new way of thought process in terms of how we redefine our relationship. For example, I think that we need a new mindset shift in terms of the way we are doing business. Not long ago, Africa was one of the least connected in terms of telephone and technology. But then we did an applied technology shift when we introduced the use of mobile money using a phone. And overnight, the biggest transactions take place on a phone without accessing banks. And that was something that was developed in Africa. And obviously, the need for us to start to revolutionize existing technologies to suit the way we do things. I want to shift in a little bit in the area of the creative industry. For the last century, we've been consuming, if you like, Hollywood-style kind of movies, our fashion industry, our food tastes, But suddenly, I think lessons coming from West Africa, and the case study of Nigeria, for example, Nollywood, has revolutionized the African story and the way we look at Afrocentric belief systems. And you see a growth in music, in dance, in drama, in fashion, in the culinary industry, suddenly becoming an economic activity, and then overnight creating a big market, and then making a shift. So you find new ways of doing business, art, drama from Southern Africa, East Africa, the Maghreb states, and suddenly we are beginning to recognize that we have a good story, and that story can make business sense, and in a sense it can lend to mindset shifts. I think that's an area we need to look at differently. The second one is the need to harness our diaspora. We have a very strong, growing, young population that has gone out there, learned the skills, and then can transfer the skills and actually acclimatize them to local needs and then create a rolling industry. And if you look at the total resources that are in the diaspora, in the US, in Canada, in Europe, in Asia, if we can then start to create financial systems that can bring that capital here, I think that it can make a very big difference. A case study is Mexico, how much money goes in from the diaspora and actually is transforming economies. The other thing that I would like to suggest is that we need to create a revolution. Again, we see examples when Ethiopia was turning the millennia of 2000, they called back everybody home. And overnight, they were able then to create a transformative thought process because of harnessing that intellectual capacity. Case in point, they created an agricultural transformation agency. Ethiopia is a big consumer of teff, which is a cereal that it makes injera, which is the main ingredient of the food they eat. In 10 years, Ethiopia was able to transform its agricultural revolution of teff production, and then they were able to produce so many products and product development that was then able to transform that economy. Currently, Ethiopia now is a leader in cereal development, and that was because they were able to bring together different groups of people, take them on the drawing board. And I mean, Africa has 600 plus cultures, tribes, and people spread all over the world. And I think that we need to learn from each other and then be able to take some of those lessons that then can help transform our economies, our cultures, our societies, and our economies for that matter. Thanks.
Hopefully. Thank you, Stephen. Thank you, Bob. Thank you, Osman. Very insightful conversation. Thank you, ladies and gentlemen, and have a great evening.